Hey, everybody, it's Doug Shoemaker with the Shoemaker Loan Team at Homestead Financial Mortgage. And if you're new, welcome to 1 Minute Monday. If not, welcome back. Hey, I really do appreciate you guys for checking me out and also for sharing these videos with some folks that just need some good, honest help. Before we get started here, if you're finding this information helpful or you know somebody else who might, please like, subscribe, and share. And if you could leave any mortgage or market related topics that you'd like to learn more about, please let us know below in the comments. All right, let's go ahead and hit the main headlines first. For those of us who just want to know what time it is, hopefully in 1 minute or less, and then we're going to dig into how to build the clock for those who like a little bit of a deeper dive. Well, the Fed has just delivered its second straight rate cut this year, lowering the Fed funds rate by about 25 basis points to a range of 3.75 to 4%. Home prices are still up compared to a year ago, but that growth has cooled around 1.5% on one major index and 2.3 on another. Pending home sales for September held flat versus August and are down just 0.9 versus last year. So there's steady contract activity. And for mortgage rates, the 30-year fixed rate ended the week at 6.34%, 5.82 on a 15-year. 30-year fixed rate was FHA was 6.06 and the 30-year fixed VA was 6.08, all posted through Mortgage News Daily. Now, these are all national averages, which aren't necessarily your rate or my rate. They're just averages based on a bunch of different criteria. Make sure and reach out today, and I'd be glad to show you how easy it is to determine your specific rate for your particular transaction. For rate lock consideration, under 10 or 15 days, especially if you've got low risk tolerance, I would probably go ahead and lock, especially if you're not working with a certified mortgage advisor. Now, if you are, I just follow their guidance. Now, if your timeline is beyond 15 days, you could float, but have your trigger ready if you aren't getting regular market updates from your loan advisor. Now, that is pretty much it for my friends that just want to know what time it is this week. Now, check in at the Shoemaker Loan Team on Facebook anytime to get live updates. Otherwise, you'll see me back again next week for our next 1 Minute Monday. All right, for my friends that like to know how to build the clock, buckle in. We're about to go full update here. Well, we're in day 32 of the government shutdown. And once tomorrow hits, it's going to actually tie the longest shutdown in history unless these adult children's actually start working together. It seems like we're going to hit a new record. Some actually think that the elections in some states this week have something to do with it, but the reality is it's starting to get really ugly. SNAP benefits that include things like food stamps, they actually expired on October 31st. So we're hearing that this could affect 1 in 8 Americans, that they could lose access to the fine things in life like food. Now, that said, Treasury Secretary Scott Bessent sounds pretty optimistic that it could be funded as early as Wednesday. Air traffic controls being notified that their next paycheck, and this is going to be on Friday, they're going to be notified that their next paycheck is going to be the massive sum of nothing. So it looks like delays are already increasing. And frankly, the last people I want stressed out are our air traffic controllers. Not only that, but you can't blame these folks that have got bills that if they got to get out there and DoorDash or do whatever they need to do to try to feed their family, instead of working for free, man, it's kind of hard to blame people that might do that. Another big problem with the shutdown is that the industry and the Fed just don't have the data they need to make the best possible decisions. The only report we're going to see this week is the ADP jobs report. Now, the market's expecting 24,000 jobs to have been created in October, but other resources are already showing some weakness in that labor market. Macro's Edge, their October reading of announced job cuts hit a 25-month high in October, if that tells you anything. Now, the Federal Reserve lowered its benchmark target to 3.75 to 4%. Two members dissented. One wanted a bigger cut, and the other preferred no change at all. Now, Chair Jerome Powell emphasized that a December rate cut is far from guaranteed. I think he said it's far from a foregone conclusion. And that statement alone took our really, really nice decreasing rate environment, turned it on its head, and sent rates the wrong direction. So the key takeaway truly is that the Fed is still trying to walk that tightrope between curbing inflation and supporting the labor market. Now, I feel like such a broken record because I've been saying that for about 3 months, but it just kind of is what it is. Now, the Case-Shiller Home Price Index showed a 0.3% decline month to month. and 1.5% year over year. The FHFA house price index rose 0.4% month to month and 2.3% annually, and that's for conventional mortgage financed homes. So, yes, prices are still higher, but growth is clearly slowing. If mortgage rates go down, the buyer demand piece could reignite pressure and move it upward. Now, the National Association of Realtors reported that pending home sales in September were flat from August and down just 0.9% year over year. Now, that's still the second strongest pace of the year. Interpretation is that buyers are cautious. They're likely influenced by rates, but activity is decent. Lower rates may draw in more clients. Now, for lock or float guidance this week, if you're closing within 15 days, you probably want to lock now, especially if you've got a good quote. With the Fed in this kind of zone, you likely don't want a surprise uptick that you're just not ready for. Now, if your closing's beyond 15 days, you can float, but again, make sure you've got a strategy. Make sure you're working with a certified loan officer and then pick a trigger. For example, if rates improve by 15 or 20 basis points, or if there's, any certain meaningful rate that you're looking for, and be ready to lock. If the market starts pricing in more Fed easing, you might see rates move lower, but if the opposite happens, you need to lock before you get burned. So, with some government labor market data delayed, you're going to want to watch the ADP private sector employment report. I think that's on Wednesday for clues for hiring strength. Track the bond markets, especially mortgage backed securities and the 10-year Treasury yield. If yields decrease, mortgage rates might follow, or they will follow. Now, listen closely to the Fed commentary. Any hint on December's meeting could move rates as well. Now, for the technical picture this week, mortgage backed securities, they're sitting right at that 25-day moving average. If they break above it, there's room for roughly 50 basis points of improvement before resisting near that 101.42. Now, the 10-year Treasury yield, it remains kind of range bound, supported at the 25-day and capped by the 50-day. So markets are at a decision point, which kind of reinforced the earlier advice on locking versus floating. So, who's ready for the family hack of the week? Well, hey, everybody, since it's October and it's National Peanut Butter Lovers Month, who knew? I guess everybody now. Here's a simple and fun treat. It's a peanut butter and jelly bar. This recipe that I've got down below makes 24 of these things. Check out the details in the description. And yes, please bring me some once they're finished. Well, everybody, that's it. Thanks so much for sticking around with me. If you or somebody you know is thinking about buying, refinancing, or simply want to see how these rates move or how they impact your scenario, give me a call at 618-795-0790, or you can email me at dshoemaker@hfmloans.com or visit the shoemakerloanteam.com. And hey, if you're already in process and you're looking at your loan estimate because no one has gone over it with you, if you'd like a second opinion on that, go ahead and shoot me an email with that loan estimate. And I'll never bug you to do something you don't want to do, especially not before you're ready. I just want to make sure that you get some good, honest advice and make sure that my team and I are there for you when you do need us. So, everybody, that's it. Have a great week, and I can't wait to talk to you soon.